Novak Djokovic's next big move isn't on the court, it's on Wall Street. The consensus read is already outdated. What matters now is the second-order effect most commentary still ignores. We will map trigger, incentive shift, and downstream impact before the close. He entered venture capital. Not as an investor dabbling in startups on the side, but as an operator, a strategist, and someone betting his credibility and capital on innovation. This is significant because it signals something deeper about how elite athletes are now structuring their legacies, their wealth, and their influence after competition. Let's be clear what happened. Djokovic didn't just write a check. He positioned himself inside the startup ecosystem at a moment when venture funding is becoming scarce, when founders are desperate for credibility, and when celebrity capital is being weaponized as a distribution channel. He's not just putting money in. He's putting his name, his network, and his reputation at risk. That's a different bet entirely. Here's why this matters right now. For the last decade, professional athletes treated endorsement deals and post-career business as a checkbox, supplement lines, real estate, maybe a tech angel investment. But Djokovic is going deeper. He's become a venture operator. That means he's going into board meetings, he's evaluating unit economics, he's thinking about market traction and runway and Series A rounds. He's doing the work that most retired athletes avoid because it's boring, it's risky, and it takes years to see payoff. The signal here is worth unpacking. Djokovic is 37 years old. His peak earning years on court are behind him. Prize money is finite. But venture capital, done right, compounds. If he backs 5 startups and 2 of them reach unicorn status, his early-stage equity stakes could be worth far more than any Grand Slam prize. More importantly, it gives him optionality. It keeps him relevant in innovation circles. It builds a second career that doesn't require him to be the fastest or strongest anymore, just the smartest about where capital flows. For founders, this is a two-edged sword. Having Djokovic as a board member or strategic investor brings credibility. It opens doors with other investors, with media, with enterprise customers who pay attention to who's backing a company. But it also means your company is now part of his personal brand. Every failure becomes a public failure. Every exit becomes attached to his legacy. That's why most celebrity investors stay passive. Djokovic is choosing the opposite. The contrarian angle here is worth considering. Some investors and venture professionals will see this as a distraction. A tennis legend learning to read cap tables and navigate Series B negotiations is not the fastest path to venture returns. There are dedicated VCs who've spent 20 years building expertise. Djokovic is starting from scratch, even if his brand is already built. So why is he doing this? Because brand and venture is its own category. It's not enough for a startup to be good anymore. It needs to be backed by someone who has credibility in mainstream culture. Djokovic has that in spades. That's an asymmetric advantage that a traditional VC can't replicate. Now let's think about what changes next. This move will likely trigger a wave of athlete-led venture funds. You'll see other elite athletes, tennis players, footballers, cricketers, musicians, building their own investment vehicles. Some will be pure PR plays. Others will actually generate returns. Djokovic's move will be the proof point. If his portfolio companies start raising follow-on rounds and hitting milestones, every athlete with $20 million in the bank will be asking their wealth manager about venture funds. If it stalls, it becomes a cautionary tale. Either way, it's a signal that the gate is now open. For the broader startup ecosystem, this is both opportunity and noise. More capital is coming from non-traditional sources. That's good if you're a founder struggling to raise. It's bad if you're a young VC trying to differentiate yourself based purely on capital and networks. Djokovic just entered a market where his marginal value is very high, he can open doors that few other people can open. But that also means he'll be selective. He'll back companies that align with his personal interests, his geographic footprint, and his worldview. That's not necessarily the market-optimal allocation of capital. Here's what to monitor over the next 60 days. First, which sector does he focus on? Is it sports technology, health and fitness, tennis-specific, or something broader? Second, who does he partner with? Does he hire a dedicated team, or does he stay hands-on and informal? Third, what are his first investments? The selection will tell you everything about his actual conviction versus his marketing instinct. And fourth, how does the media narrative shift? If his first portfolio company gets covered in TechCrunch or Bloomberg, we'll know this is being treated seriously by the venture establishment. If it stays in sports media, it's a vanity play. The deeper implication is about wealth and optionality. Djokovic has earned approximately $150 million in career prize money. That's extraordinary. But it's also volatile. It required him to be the best, every single week, for 20 years. Venture gives him a path to compound that wealth without needing to hit forehands anymore. It also gives him a second act. Most athletes fall off a cliff after retirement. Their identity collapses because the thing they were the best at is no longer available to them. Djokovic is preemptively building a new identity. He's not just a tennis player anymore. He's an innovator, a venture strategist, a brand that opens doors in boardrooms. That's a significant psychological shift. For investors watching this, Djokovic's entry into venture is a small signal about a larger trend. Capital is becoming decentralized. Legendary athletes, musicians, content creators, and influencers are becoming alternative sources of funding and credibility. They're not replacing VCs, but they're creating parallel networks. Some of these will generate outsized returns. Others will be destroyed by bad bets and ego. The winners will be the ones who treat it like a discipline, not a hobby. So here's the bottom line: Novak Djokovic isn't just retiring from tennis and finding a new hobby. He's entering a new arena where capital, networks, and credibility matter more than athletic dominance. That's a play for sustainable legacy. Whether it works depends on how serious he actually is about the work. But the signal is clear. The gate is now open. Other athletes will follow. And the venture ecosystem is about to get more crowded, more mainstream, and more competitive for founders trying to raise capital. This is worth paying attention to.